Welcome back. In this video, I'm going to continue to talk about asset allocation. If you haven't already done so, I did start talking about asset allocation, but I focused on risk tolerance. In this video, I'm going to talk about the geographical location of your portfolio allocation. I do also have a video talking about different country indices, for example, the TSX Composite Index in Canada and the S&P 500 in the United States. So if you are not familiar with what a country index is, please make sure you look at that one too. So I'm going to explain how to use country indices to build a index ETF and allocate different regions of the world. Now I'm going to explain how to use those country indices to build a globally diversified portfolio. So after I have students or clients or people I'm helping choose their risk tolerance, and that can go anywhere from a 60-40 balanced portfolio to a 100-0 all equity portfolio, the next thing I have them to do is consider how they want to allocate their finances across the geographical regions between Canada, the US, and international equity. So what I have them start with is break up your equity portion into equal portions. So for example, if you were doing a 100-0 all equity portfolio, maybe you just want a third of it in the Canadian portion, a third of it in the US portion, and a third of it into the international portion. If you had a 60-40 balanced portfolio, your equity portion, your risky stuff, your stocks, maybe you want to do 20% Canada, 20% US, 20% international, and then the 40% into the bonds portion. And the reason I have them do this is just for the basic fact that when I started becoming an index investor, I was influenced by a blog called the Canadian Couch Potato Portfolio, written by Dan Bartolotti. And that's basically just what he said. Just break up your equity portion equally. It's easy to do. You don't have to think about it, and it's easy to maintain. But then I have them think about personalizing it. Is breaking it up equally in between those three geographical regions appropriate for you? If you look at the global stock market, you can see that Canada actually only makes up 2.7% of the global market. The US, however, makes up 42.5% of the global market. So maybe instead of breaking up your equity portion equally, maybe you want to mirror what the global market does. So maybe you want to allocate 2.7% of your portfolio into the Canadian portion, 42.5% of your portfolio into the US portion, and 54.8% into the rest of the world, the international portion. Now, there are some tax advantages to holding more Canadian stocks. So maybe you want to think about that and you want to increase your Canadian portion a little bit. These are all things that you have to think about when you are personalizing your own portfolio. I will tell you what I currently do for our family. It's by no means a recommendation or anything like that. It's just something that we decided to do. So as you probably know, we are a 100-0 all equity portfolio. And we decided to break up our equity portion into 25% Canada, 50% US, and 25% international. The reasons, basically, the US has outperformed the rest of the world in the last while, and we wanted to take advantage of that. So we increased that allocation up to 50%. And you can see it's not a huge bias towards the US. We put 50% in, and the US share is 42.5%. So we did up it about 7.5% from the global market. And because of some of the tax advantages in companies that we do recognize and know, I do have a slight home country bias. I did go 25% in the Canadian equity, and that's quite a bit higher, almost 10 times higher than what Canada represents globally. But we were comfortable doing that. And I know, talking to a lot of Canadians and reading about how Canadians allocate their portfolio, many Canadians have 100% of their equity in Canada. I don't think that that's a very diversified portfolio. You are losing a lot of growth if you just invest in the Canadian market. You can see here that if you invested all of your portfolio in just Canada, the sector allocation is heavily swayed towards the financials and the energy sector. So you would be holding a lot of banks and oil companies. And if you look at the S&P 500 in the US, they are heavily tilted towards the information technology and healthcare. So if you didn't invest in any of the US, you would miss out on the information technology side. You can see here on the TSX again, very little of the market share is in information technology. So you're going to be losing out on that growth potential from the IT sector. You would miss out on the Apples and the Googles and the Microsofts and the Amazons and all those companies. So if I was to build a 100-0 all equity portfolio using index ETFs, and I broke it up into the way I currently have them broken up into the 25% Canadian, 50% US, 25% international. What I might do is I might take my portfolio and 25% of it goes into XIC and 50% goes into XUS and 25% goes into XEF. And I'm by no means recommending those. I just used the top ones on my spreadsheet basically. iShares is the largest ETF provider in Canada, so I just used those for an example. And you would be able to build your portfolio at 0.12% MER. So for every $10,000 you have invested, the fees would be about $12 every year for you to hold that portfolio. That's a very low fee considering mutual funds are upwards in the area of 2%. If you wanted to build a 60-40 balanced portfolio and you wanted to mix up the companies, you might say you have 15% invested in XIC, 30% invested in ZSP, that's your US portion, 15% into VIU, and then your bond portion might go 40% of your portfolio goes into ZAG. And you would build a portfolio for, again, that's going to end up being less than 0.12% as an MER. If you're interested in knowing how to buy those ETFs, I do have a video on Questrade's practice account and you can check it out there. So I hope this video has shown you how to allocate your portfolio across different geographical regions. It is important to build a balanced and diversified portfolio, and this is a great way, an easy way to do that. If you've enjoyed this video and would like to stay informed of others, please subscribe below. And as always, have a wonderful day.